Like my glasses, I just went playing racquetball. I'm just kidding here. Actually, these glasses are really good if you're doing a lot of computer work. Kind of filters out some of that light, and it helps me prevent headaches. Anyways, I'll take them off right now so you can see. I'm your host, Michael Madwell. This is another episode of Follow the Money. These opinions are myself, not of SWFI. So, welcome to another episode of Follow the Money Show, the show on institutional investors. I have a lot of things to talk about today. One of the big pieces that I want to talk about is Norway Sovereign Wealth Fund. And basically, Norges Bank Investment Management, which is the manager of Norway Sovereign Wealth Fund, they just said that they are recommending private equity to the fund to invest into. Now, Norway Sovereign Wealth Fund has over $1 trillion in assets, and they've been relatively conservative on jumping into private markets compared to peers such as U.S. pension funds, right? U.S. pension funds like CalPERS, CalSTRS, the New York Common Retirement Fund, they have all been active private equity investors, whether it's private equity co-investments, private equity funds, joint ventures. Norway Sovereign Wealth Fund is now taking a look at private equity. And this is a very big issue because Norway has over $1 trillion worth of assets. Now, $1 trillion will not flow into private equity, let's be straight here. But a percentage will. So they're still looking at it. It's not final yet. Things take time. It's not going to happen overnight. In fact, this topic has been debated for about almost a decade. And they just got into real estate a few years ago. And it's a 5% target allocation. So 5% of $1 trillion, do the math, right? So we think that if this private equity thing does go through, it's going to lead to probably a 3 to 4% allocation to private equity funds and possibly co-investments in the next 1 to 2 years, depending on how fast they can ramp up their internal team and how fast they can access certain funds. And Norway will be very cautious in this approach. They're not going to go willy-nilly and start investing in all these private equity funds and giving money to all these managers. I think they're going to be very cautious and strategic on who they're going to allocate private equity capital with. That being said, again, this thing is still in the works. It's not for sure exactly, but this letter appears to be a recommendation. And so again, if you are a private equity firm and you've been marketing to U.S. pension funds for a very long time, you should be looking at sovereign wealth funds, and you probably are. In fact, David Rubenstein has been making this widely noted. He's been in many conferences basically saying that sovereign wealth funds are a major part of private equity. And, if this wealth fund does go into private equity, it's definitely going to make a very big headway. So the story is actually, it's not paywalled, so anyone can read the story off our website. And I actually modified my quote a bit because Norway Sovereign Wealth Fund does not take board seats, okay? But they're very active in participating on voting on issues, right? Because they vote on labor issues, environmental issues, and so I just want to make clear that they do not take board seats. And so my quote now has been revised. It's updated on the website now. But I basically said, Norway Sovereign Wealth Fund is in the $1 trillion investor class. The wealth fund has intimate knowledge with the largest listed companies as the fund votes on important corporate issues. In addition, the wealth fund has a long-term horizon. Okay, so let's follow the story. And if you are a private equity fund, I would start to figure out how Norway Sovereign Wealth Fund makes investment decisions, what types of assets the wealth fund has invested into, and possibly look into, what historically has been their investment process. And private equity is an asset class where it's not as structured as other investment classes, and the investments aren't as vanilla. So that'll be interesting to see how that is being implemented within the wealth fund. I mean, will Norway Sovereign Wealth Fund hire a consultant to map this thing out? Probably. Will the Sovereign Wealth Fund use a fund-of-fund model? No, they probably will not. Okay. Another story that I wanted to cover is the ECB story. This one is very interesting. And it's the European Central Bank. They basically offloaded a bunch of bonds in Steinhoff International Holdings, which is a South African retail company. They own a wide range of brands. But why the story is kind of noteworthy is that these corporate bonds purchased by the ECB were part of the QE corporate bond purchasing program, which was a little bit controversial. You have central bank buying up corporate bonds. Other central banks do, and the other central banks like the Swiss National Bank, own shares in Apple. But the ECB is very conservative in their investment approach, and this just shows that even if you do invest in corporate grade investment grade bonds, I believe Moody's at one time rated them as investment grade bonds, that there is risk to that. So I guess Steinhoff, they are basically in a whole heap of trouble right now. On the equity side of the ownership, some of the large equity shareholders, and they might not be shareholders now, but what was once recorded, include Norway Sovereign Wealth Fund, APG Asset Management, South Africa's Public Investment Corporation, and Singapore's GIC Private Limited. So Steinhoff had a lot of sovereign wealth fund and large public pension capital as shareholders, and the reason also is because it was a very well-known South African stock, right? Because a lot of wealth funds do invest into rapidly developing economies, and Africa is one of those markets, especially South Africa, and Steinhoff, it's up in the stock exchange there. So that is a very interesting development. A few notes here. The ECB does not make the size of its debt holding available to the public, but what was indicated that had about 100 million euro worth of Steinhoff debt. So not a lot of money, but still a notable amount of capital being spent there. Okay. A little side note here. If you haven't signed up for our conference in February, you can go to iinvestorforum.com. We have the SWFI Institutional Investor Forum 2018 at Hotel Casa del Mar. If you want to learn more about it, just email events@swfinstitute.org. That's events@swfinstitute.org. And we're partnering with the World Ocean Council. So it's going to be a mix of asset allocation, infrastructure, ocean investing, what opportunities are there in the blue economy. We're going to look at blockchain, life extension. We have a wide range of people coming from large sovereign wealth funds to city pensions to endowments to family offices. On the investor side, the typical asset managers, custodial banks. But we also have a lot of interesting niche strategies and corporates coming as well. So it's a very diverse group of people. And I really recommend coming to our events because you get to meet fascinating people, hear great stories that are not really in the media, right? When you read general financial media, it is interesting stuff, but there's so much more to be explained. There's so much more to know, and that's why I highly recommend, whether you're an asset owner or a manager, to really go to some of these events. Not just mine that we host here at SWFI, but other events out there, because at the end of the day, it's about getting good intelligence and knowledge sharing to make better investment decisions, right? So, iinvestorforum.com, and also our Japan conference is going to be in Tokyo at the Ondas, and that's June 5th and 6th, okay? And then I believe Europe will be in Rome. So that's kind of the whole year's planned out. And I will be assisting an event in Abu Dhabi. I'll give you some more details on that. Okay, let me shift gears here. I want to talk about institutional real estate and why real estate is becoming wealth funds and pensions are pretty much a cornerstone in the institutional real estate market. GIC and CPPIB, which is a large Canadian pension plan, they just formed a investment platform to focus on multifamily houses, mostly in the southern United States, Class B type of properties. And it just shows that wealth funds and pensions are actually partnering together in club deals and working with specialists in the area. So for this story here that I'm talking about, it's Cortland Partners. So basically they're partnering with a real estate housing specialist, basically using their expertise and their deal flow. And then CPPIB and GIC are basically funding these transactions and rehabbing these properties. The last deal that the GIC and CPPIB did together was with Scion Group, and that was purchasing U.S. student housing. Okay, so in this deal, let's kind of dive into it. I believe they're going to acquire and renovate 8,000 to 10,000 Class B multifamily units, aka apartments, for those not familiar with the lingo. And CPPI and GIC will each own a 45% interest in the investment platform, with Cortland Partners owning 10%. And to initially fund the joint venture, 3 properties were acquired by the platform. The first one was Lake Crest. It's a 404-unit rental complex in Denver. Orem Falls River, a 284-unit complex in Raleigh, North Carolina, and Waterstone Apartments, a 308 rental complex in Austin, Texas. Okay, so there are deals being done there. Going over to China, China Vanke recently acquired 20 shopping malls in China from Singapore-based Capital Land, which Capital Land is indirectly controlled by Temasek Holdings. That's another sovereign wealth fund. China Vanke and Tri-Water Asset Management. They're also holding a undefined stake in the newly acquired portfolio, which consists of almost 1 million square meters of total gross area. And these malls are located in cities such as Beijing, Dongguan, and Yangzhou. And many of the assets, let's see here. So it's kind of interesting. This is kind of a reversal. Usually, sovereign wealth fund capital has been flowing into China, and this deal is, it's changed. But wealth funds often realign their portfolio. So when conditions are favorable or unfavorable, wealth funds will be, very strategic. This is the same case we saw when the China Investment Corporation acquired Logicor from the Blackstone Group. Now, the CIC, the China Investment Corporation, is trying to find and sell back some of that portfolio to other investors. Okay, so deals don't only go one way; deals go 2 ways, right? It's not just private equity funds selling assets to sovereign wealth funds. It's also sovereign wealth funds selling their assets to other private equity firms, other Canadian pensions, and other firms out there. Also, I want to talk about the direct healthcare investments by wealth fund and public funds. It's our 2017-2018 report that we did on basically public fund capital flowing into the healthcare sector, pharmaceuticals, finding cures for Alzheimer's, healthcare, digital startups. If that report's off our website, if you want to learn more about it, just go to our website, and right now it's on the upper right side of it. But for our subscribers, it's a free report. If you want to purchase it as a one-off, just click on the banner link there. But that data the data in the report is from our transaction database and through our asset allocation and research. Again, if you're looking to learn more about healthcare and read more into those flows, it's a very good start. Let's kind of scroll down here, and I want to end this podcast covering over just a few more topics here. One of the topics that I do want to cover, there's a story in the press that the Chinese central bank is looking to possibly rethink their holdings of U.S. Treasuries. And obviously China is the largest foreign country that holds U.S. Treasuries. And part of the central bank is a safe investment company. That's more of their aggressive arm that invests in equities and other types of assets, such as private equity funds and infrastructure. But we're still trying to get some information on the veracity of that story, and if there really is going to be, if China is really going to be pulling back and buying U.S. Treasuries, or are they trying to telegraph something? So that we're trying to get some more intel on that. And so we'll be publishing something on that story too, on the Chinese foreign exchange reserves regarding U.S. Treasuries. A few notes here. Still tied to the real estate market, the Abu Dhabi Investment Authority, they were a big backer in an Indian affordable housing fund. I believe they put in $900 million, the Abu Dhabi Investment Authority. So India has been a very big part of ADIA. ADIA has been investing in India for quite some time, and this just shows that the dollar amounts are just getting bigger. The check sizes keep getting larger. And as India is becoming more open to foreign investors creating vehicles to do such things, wealth funds are willing to write bigger checks, and it's just kind of showing that the gates are open there. On the venture capital front, Temasek Holdings participated in a Series D round of Bolt Threads. Bolt Threads is essentially they make spider silk from microbugs. So a lot of the synthetic material investments made by sovereign funds, this is a very big trend here. I think material science and how that can be applied to various industries is very compelling for sovereign funds. Sovereign funds are backers of large chemical companies and going down and backing innovative firms such as Bolt Threads. I believe this Series D now is at 213 million. It was at 123 million back in November. Other backers of this company in this round include Fidelity Management, Founders Fund, and Formation 8, which I believe has ties to Silicon Valley. All right. Well, hey, if you want to see our video podcast, you can just view us off YouTube. We're on followthemoneyshow.com. We are also on Asset TV sometimes. And if you like what I'm doing, please comment. Please subscribe on the button below. This is, I believe, my third podcast or second podcast that I put on YouTube. We've gotten quite a good audience. But I just want to make sure that I'm giving you the right contact. And if you have any feedback onto what I'm saying or doing, I really want to hear it. So again, subscribe on the box below. And I look forward to engaging in our conversation. And enjoy Follow the Money. Have a wonderful day.